Okay. So in this first part, we will just go over the research report, and so you can see a very broad outline here that we will be covering, and we will be sharing the time among the three of us. And so maybe one thing to mention right in the beginning is that it was in a very turbulent time that we were doing this research. You probably all know, since you work in the field of housing or finance or housing finance, that 2022 was the year of big changes and big shifts, and we still don't really know where this situation is leading. And so we were trying to, or we were conducting research during this turbulent period, which was quite challenging at times. And so how we try to overcome this or handle this is that with the data collected, for example, we also try to indicate months at all times. And we were also asking our interlocutors in the interviews we were conducting, for example, how they assess this current shifting environment. So of course, we also think it is very relevant that we now have this research specifically at this historical moment, but it also needs to be handled accordingly. So we finished most of the empirical data collection over the summer of 2022, and then some of it went on until October, but the changes that happened since then are not included in this, of course. And so we wanted to start off by explaining what the motivation and rationale for this research was, because it was not purely, or actually not at all, a traditional academic project, but it was much more a practice-driven research project that was also serving practice. And this is because all of the consortium members, and I will show you who these are in just a second, they are very much connected to the housing realities of their contexts, and they are working on developing new models, many of them. So the way we framed this research came from an initial hunch or a hypothesis that there is a significant demand, or there are target groups for new kind of housing models in the Central and Southeastern European region. And we just wanted to specify, sorry, there is someone ringing in the office. So we wanted to specify who these target groups are and measure their size. And so a little bit of a teaser for the later part of the presentation is that we did find that there is a significant demand and target group for these housing models. And we will go into who they are specifically later on. And then another of our motivations was that in our different efforts to develop new housing projects and housing models, we always came up against the challenge of missing adequate financial instruments for these projects. And when we were in negotiations with different financial actors, we saw that this limitation or this bottleneck is something that we necessarily need to overcome in order to have new projects that can develop. And so we wanted to find new allies in this whole process and understand which are the current elements in the housing finance landscape that can somehow be shifted in order to have new instruments develop. And so in the end of the report, we developed this theory of change of how this deadlock can be overcome and how a new rental and cooperative housing market can be developed in these countries. And so the partners, you can see here on the slide, it was financed by the Catalytic Capital Consortium that you can see here. And then there's Mobile Housing Network as a federating entity. It's a network of pioneering housing cooperatives in the region. And then there were 4 research entities that were fundamental in this research project, because they were the ones doing the research on the ground in the local language. And those were Periferia Policy and Research Center in Hungary, Kogradigrad in Serbia, ESSP in Slovenia, and Pravo na grad in Croatia. And beyond that, there was Habitat for Humanity's regional office, European and Middle Eastern office, who helped us in covering a bigger scope of countries. So we could cover 8 countries altogether, and they mobilized their experience and their very significant network in this region. And then there is also the Cooperative for Ethical Financing, which is also a member of MOBA Housing Network. And the participation of this organization was fundamental in terms of understanding the existing and potential financial tools. And so MOBA was kind of this federating entity for the other consortium partners. And so just so you understand, it is a cooperative of cooperatives, which is incorporated in Croatia, but operates transnationally. And it's a federation of housing organizations and pioneering housing cooperatives from the Central and Southeastern European region. And it is meant to support these local entities in developing the local projects. And one of its main aims is to do financial intermediation for these projects. And so all of the practical experiences of MOBA and of the local partners were channeled into the research questions that were put forward in this project. And so this also kind of shows which countries we covered. Altogether, there were 8 countries in the research, 4 of which are highlighted with a darker color, were the so-called core research countries. And in these core countries, we did representative surveys in the capital cities with households, and we also did interviews with local financial actors. And in the light blue countries, we only did desk research and expert interviews with housing experts. So there was this 2-tier depth of the research, let's say. And so there are 2 notions that I want to clarify as a starting point, and then we will move on to our results. One is what we mean by affordable rental and cooperative housing models, and second, what do we mean by catalytic capital? Because these 2 terms are what define the whole research project, which are also in the title of the report. So by we were speaking about affordable rental and cooperative housing models because we think it is fundamental for the housing markets in the region to be able to go beyond individual ownership of housing. And these are both models, pretty widely defined models that go beyond this kind of model of individual ownership. And so first, in terms of affordable rental housing, we mean rental units that are owned and managed by larger nonprofit housing providers. So this would also be a shift from the fragmented existing rental housing markets in the region. But here it's very important to highlight that we are not advocating for a profit-oriented institutionally owned housing sector, because this is something that that has caused significant transformations on Western European housing markets, for example. So in our terminology or approach, it is very important to have nonprofit models that are either public or third sector and that provide housing in the long term. And so the important thing is to have actors that are present in the long term on the housing market. And then in terms of cooperatives, we also want to make a disclaimer, because in the Central and Southeastern European region, there are existing housing cooperatives that were mainly established in the 1970s and 1980s basically as an ownership model at that time. And so we do not advocate for this ownership-based model of housing cooperatives, because we think that in the end, the target groups for these are the same as for plain individual ownership. So what we call these cooperatives are limited equity and use-based cooperatives. And the benefit of this model is that people who would not be otherwise able to access individual home ownership are able to enter this model through a smaller saving and then through monthly contributions. And it also moves beyond the question of individual creditworthiness and individual liability and housing finance, because It is the cooperative itself that owns the whole building and the housing units as well, and it is the cooperative that has to be financially liable and creditworthy. And then one other small disclaimer is that, of course, the regulatory environment is very important in this whole field, and we will address this topic a little bit, but it is not the main focus of the report, because the main focus of this research and of the report was to focus on how private actors can shift their practice in order to enable this new market. And so these are just a few examples of these kind of housing models that I was mentioning before, both of the nonprofit rental housing providers and of cooperative housing providers. So as you can see, these are pretty large scale housing units. One of them is an old one from the early 20th century, the one from Vienna, but the other three are very modern contemporary housing developments. And so these are nonprofit housing providers that can actually intervene on a larger scale on the housing market that do not exist for now in the region. And this is what we are looking at now, how to develop these actors in the region. And one last point, what do we mean by catalytic capital? We mean capital that is very patient and that intervenes where market-based financing does not intervene or is not present, and also has the capacity to draw in market-based financing afterwards. And so this is a graph made by the Catalytic Capital Consortium, who were financing this project. And so you can see here that catalytic capital is at the very end of this capital spectrum, or at the most patient end, let's say. So this is just something that's important to keep in mind throughout the presentation. And so now I will pass it on to Csaba, who will present the findings.
Thank you, Zsuzsi. And I also welcome everyone. I'm Csaba Jelinek from Peripheria Policy and Research Center, and I was one of the coordinators of this research. And the first chapter of our report is based on extensive desk research. And our main finding was that there is a significant mismatch of the demand and supply side of affordable housing in the region, as it was already said by Zsuzsi. Within this chapter, we show that there are at least 20–30% of the population who are exposed to some form of housing poverty in the region, which means that there are also lower middle and middle class population groups who are included in this category. We also show that within this region, a very specific problem is housing quality, and within that energy poverty, a very special issue which came to the fore in the last 1 year very significantly. Also, what is a special feature of these housing markets is the widespread presence of informal settlements in urban and also in rural settings. We also show in this chapter that how usually these housing markets are called is a term called super homeownership regimes, which means that there's a very high rate of homeownership, which means from our perspective that these markets are not really flexible, quite rigid, and usually there are only very small and residualized public housing sectors and unregulated, unaffordable, and often dysfunctional rental market. So there is this structural setting in which this story develops. And we also, within the report, in this chapter, we identify 3 specific target groups who are especially in need from many perspectives. And these are young people, elderly people, and people who are tenants who rent their dwellings. In this next graph, we can see that the housing stock, up to 80% of present-day housing stock is older than 30 years in these research countries, which is one of the main reasons of quality-related problems and energy poverty. In the second picture, we can see the visual representation of these so-called super homeownership regimes. If we can go to the next slide, we see that in all of our countries, the homeownership rate is above average. And on the right, you can see a map which shows that it's on the periphery of Europe, which is depicted here with a darker color, where homeownership rates are pretty high, and in the core, it's much lower. However, from our research, it came out that the trend is that rental housing and living in dwellings for free provided by relatives and family members, both of these forms are rising in the capital cities of the research countries. And also when we break down the figures of people who are homeowners, also in this graph, we see that the majority of owners are either inherited their homes or bought it with loans. So we can say that these super homeownership regimes already have some cracks on their surface due to the increasing structural pressures that are present on these housing markets. So all in all, the main conclusion of the first part of this chapter is that there's a large part of the population in the region has unmet housing needs in a context where institutional alternatives to home ownership are very rare currently. And if we move ahead, then in the other part of this chapter, we also analyzed local housing markets and highlighted some of their specificities. And in the report, we conclude that the housing markets here in this region are much more volatile than in other parts of Europe. And in the last 2 years, especially, we saw the emergence of housing bubbles that were fueled by record levels of loan disbursement. At the same time, there's a relatively low level of loan penetration, but it's coupled with relatively high risks. So it's not a surprise that ESRB, which is a European Systemic Risk Board connected to ECB, the European Central Bank, issued warnings in the case of 4 of our research countries in the last year, stating that housing market vulnerabilities are present and they are caused by rapidly increasing house prices, rapid expansion of loans, and a high share of loans with variable interest rates. So in a conclusion, current housing loan markets cannot really fulfill the housing needs that we present in this chapter in a sustainable manner. Just an illustration, these are housing price indices. The gray lines are the EU average, and in all of our research countries except North Macedonia, price increases were above the EU average, especially in Hungary and Czechia, which were the 2 extremes. And in the second picture, we can see that how there's a relation between the yearly change in household lending and yearly change in nominal house prices. These data are from 2021, the last quarter, and you can see that Hungary, Czechia, Bulgaria are outliers as well in this graph. I just wanted to show that we also have so-called country digest parts in the report, which means that we not only speak about the common trends of these countries, but we highlight some specific features of these research countries that you will be able to read in the report. I won't go into details now. I would rather switch to the next chapter, and I would present what we found there. And this chapter of our report focuses on potential target groups of for new affordable housing models in the region. And this chapter is basically a deep dive into the existing demand side that we uncovered in the previous chapter. The main difference is that here we based our analysis on a survey, actually 4 surveys that were conducted in 4 capital cities in the research countries. So I think one of the main added value of our research is that we could define 2 types of demand groups in these 4 capital cities, which were Belgrade, Budapest, Ljubljana, and Zagreb. wide demand groups, which we defined as people who are either not satisfied with their current housing situation or worried about their housing situation in the near future, or who want to move out from, or someone from their household would want to move out from their dwellings. And these are, as you can see in the picture, in each of the cases, the majority of the people. So these are the people who would want some kind of change in their housing situation. And it's even more interesting to see the narrow demand groups, which we defined as people who are members of this wide demand group, and plus they are belonging to the upper 70% of the society from the perspective of income. So they have money to spend on alternative solutions, and also who would be open to become long-term tenants in secure, affordable rental housing models. And so you can see that between 13 and 23% is the ratio of this narrow demand group in these cities, which in our view a significant number. And if we move forward, we can see that in both demand groups, it was an overwhelming majority of people who agree or completely agree that renting their apartments is too expensive for them. So it's not a surprise if we go to the last slide of this part to see that people are relatively or much more open towards new alternative, affordable and secure rental solutions than it would be expected. You can see that the yellow parts of these bars show those people who are open to some degree for such solutions. So I would say that, you know, that there's this widely used argument in this region that people will only want to live in their own dwellings, and this is a cultural characteristics of the people. And but with our quantitative data, we can show and we can disprove this argument and show that there is a significant proportion of the local population who could become users of these new models, and also there is a quite well-defined demand group who can be these users. And I'm pass it on to György to continue.
Okay, I will take back the presentation a little bit to explain the second part of the research, which was focusing on financial institutions and existing financial instruments in the region. And so first of all, we did a mapping of a pretty large scale mapping based on their financial reports of those financial institutions that are the most present in housing finance in our research countries. And so these all turned out to be international banking groups, which is interesting from our perspective, or from the perspective of what future shifts we can imagine, that these are, well, foreign. There are only two groups in this first 10 who are originating from one of the research countries, OTP from Hungary and Ljubljanska banka from Slovenia. But the rest, for the majority and the biggest ones, are Austrian, Italian, Belgian banking groups. So these are the banks that are dispersing housing loans here in these countries, are the subsidiaries of international banking groups, and this will of course also determine their strategies. And so this, what you see here now on the screen is the ranking of all the banks that are present in more than one country of our research. And so this one is an overall ranking in the 8 countries of our research. And then here on the right-hand side, you can see a country-by-country ranking. And so another experience is that the banking sectors have very different volumes in these countries. So if you compare Czechia to Bosnia and Herzegovina, for example, you can see that there is a vast difference in the overall asset size of these banking groups. And we did a similar comparison in terms of the net profit of these financial institutions, which I will not show here, but you can check it in the report. And then the important part that we uncovered through desk research, in-depth desk research of the financial products and of the banks in the 4 core research countries, and also through expert interviews with the different financial institutions, was to describe the existing housing finance instruments that are available both for individuals and for organizations and companies. So if we look at what the existing instruments that are available for individuals are, we see that there is predominance, of course, of individual mortgages for acquisition of home ownership. And these are also supported quite heavily by state subsidies, especially in Hungary and in Croatia, which has resulted in house price increases in the past years, and an inequality in terms of who can access these housing loans and subsidies and who cannot. These social groups are described more in depth in the report. Another important element are loans denominated in foreign currencies, which exposes debtors to exchange rate changes, which is a very widespread practice in almost all countries of the region. There are some exceptions. In Hungary, this caused a whole very big crisis after 2008. Now it does not really exist anymore, but in most other countries it does. And also what we see is that after the 2008 crisis, most countries introduced so-called debt break regulations, which limits the loans that households can take, which is, of course, something that is a very progressive step to take in terms of over-indebtedness, but it does result in the fact that many households actually cannot access these mortgages. And this is important because of this political and economic narrative of everyone accessing home ownership and everyone being able to access a mortgage, which can be proven both from the side of the research on the financial institutions and also from the side of our survey with the households, that in the end it is not true, because not everyone who has a housing need will be able to take a mortgage, or not one that would be a sufficient amount for it to cover the rising housing costs. And one interesting characteristic, or something that would require more attention, is the prevalence of consumer loans, especially in the non-EU countries. Consumer loans are actually amount to a higher volume than housing loans, mortgage loans. And this is something that should also be addressed in the question of housing finance. And so this is a graph from the survey we conducted, where we asked people, first we asked them if they had ever been refused, and quite a high share of the respondents had been refused a loan application. And then we went into the details of why they were refused. And so these are the reasons the respondents gave. You can see that most of it is for income reasons, and this is quite connected to the debt break regulations that I was mentioning before. And then the second most common reason varies between the different cities. For example, in Zagreb, the problem with employment status is a very common reason, which can mean that people are self-employed or they are precariously employed, and so they would not qualify for a mortgage loan. In Hungary, it is very common that the banks do not give a reason. And then in Slovenia, there was often a problem with the property, which is also mainly a legal issue, actually. And maybe just one more point about this is that then we also asked the respondents how confident they are that if they would apply now, they would receive a mortgage loan. And actually, it is barely above 50% of those who would need to take a loan who are actually confident that if they would apply, they would get one. So households are not very optimistic, let's say, about getting a mortgage loan. And then if we look at the existing housing finance instruments for companies and organizations, this is an important part of the research, because it is these instruments that would need to be further developed or changed in order to have instruments that are available for new housing models. And so what we see in the current housing finance landscape is that the companies are also geared towards construction for sale, which means that the financial instruments are also very short term. there's a lack of long-term financial instruments for companies and for organizations, and this is the key point that we think needs to be shifted. And also interest rates are relatively high, there's a fast turnover, and so as a result, or because this is the existing practice, financial actors are actually unwilling to enter long-term housing finance as pioneers. And so what we see now in the current period is that this whole system of housing finance is running up against its limits. These were the average bank lending rates in March, so that's already 1 year ago, and so of course since then they have exploded even more. But already you can see that the countries in the region had average bank lending rates far above the Eurozone average. And so this means that the current system is really it's not becoming impossible to sustain itself, actually. And so in the currently unfolding crisis, I think there's the possibility to ask the question of which way to go forward with housing finance. And this broad decade of very, very low interest rates and quite generous state subsidies also supporting this kind of housing finance system. This is very obviously coming to an end now. And so what the question that we would like to put forward here is whether this crisis situation can be used to shift things in a more progressive direction and in a direction that would develop different kind of housing finance tools. And maybe all the new regulations developing around environmental and social sustainability could be a potential support for this. And in the interviews, we were asking the different financial actors about instruments that they see or that could potentially be developed. And so we did find a few elements that could be built on or that can be further developed for financial instruments for rental models and cooperative models. So one is, for example, the experience of mother banks in financing these kind of housing providers in their home countries. In some cases, we found some pilot financial instruments for housing communities, which are usually condominiums, but could be expanded towards rental and cooperative models. And then mortgage refinancing banks also have a position that can enable them to support the development of long-term financial tools. And it's also important to highlight the role of partnerships in this situation, that banks could be the actors that provide longer term capital and start shifting their existing practice a bit, but they would probably need to partner with other actors that are able to step in as like more innovative or more responsive, smaller scale financial actors. And then it's of course also important to consider the role of public actors or of potential guarantee funds that can be both public and non-public. So these are just some snippets from the report, but just to show that there are some suggestions or some elements on which we could build next steps. And we also have an appendix in the report. I will not explain this for lack of time, but we did quite a lot of interviews with housing actors and financial actors who operate outside of the region and who already have these kind of practices of long-term housing finance for affordable housing. And these interviews, these experiences are all described in the report. So it's also a very rich part, and I encourage you to look into it if you are in doubt that it's possible to develop these kind of instruments. Yes, and now I will pass it on to Anna.
Thanks, György, and hi everyone. I'm Ana Šakić from Cooperative Grad from Belgrade, and I will be speaking in this last chapter on how to enable the emerging market on rental and cooperative housing through catalytic capital investment. We heard about both of these terms in the beginning, and what György also explained is that this research came from actually need to support practice on the ground. And we can move to the next slide. So what I just want to highlight here in the beginning, that there are there are alternative housing providers emerging across Central and Southeast Europe, and particularly in the last 10 years. But since the 2008 financial crisis, across Europe started many new housing initiatives as a response actually to this crisis, which was initiated from the failures of the financial sector and loans to housing. And features of these initiatives is that they are striving for affordable, limited equity rental and community-led forms of housing, which means really new kinds of institutions. And there are currently within MOBA, which is this network or a cooperative of cooperatives of this new kind of cooperatives across our region, initiatives which are getting ready or becoming ready, or some already starting to become alternative housing providers in Belgrade, in Budapest, in Ljubljana, Prague, and Zagreb. And there are signals from the field, and both from the side of citizens initiatives, but also from cities, that more and more actors are showing readiness to take up role. For instance, we have recently heard that there are 4 cities across Croatia who are working on developing alternative housing models, which would be somehow fitting this criteria which we speak about here. And all of this is amplified by on one side, increasing real estate prices, obvious limitations of the market as it is, by spiking rental costs. I can say, for instance, in Belgrade, quite influenced also by the war in Ukraine and arrival of new people actually to these cities, inflation and rising interest rates. What we face across organizations that are also part of this research and across MOBA is this catch-22 of how to break through, how this breakthrough of affordable rental and cooperative housing in Central and Southeast Europe can come about. So on one hand, there are missing adequate patient financial instruments, which means that would be long-term and low interest rates for these new housing providers. And financial institutions are not willing to develop them as they don't see capable actors. And on the other hand, the smaller scale and new housing providers cannot scale up because of the lack of this patient finance. So there is this limbo in which we are, that it's very difficult to make a breakthrough. And as focus of our research was actually what could be the role of this catalytic capital, we see 3 possible phases in which this can happen and how it can bridge the gap of missing long-term housing finance. And on one hand, the catalytic capital beside loans can specifically be interesting in this first phase of pioneering projects that would prove the case on the ground in all of these contexts, where partially owned capital of people that are part of this project would be, of course, part of it. But on the other hand, on the first phase, the catalytic capital, then the phasing is really important. And another third element is intermediaries. And we can go now into the next slide and explain what would be their roles. So as you see, there are a number of actors, and usually smaller scale actors appearing on the ground, but they cannot approach individually, or it's very difficult for them to approach financing institutions. So intermediaries are appearing, or in need for them is appearing, because catalytic capital investors cannot engage directly with the startup housing providers. And intermediaries in that sense can collect a structured capital and issue it to end beneficiaries, meaning organizations and smaller scale providers, can channel catalytic capital towards end beneficiaries, startup housing providers, and support them also with capacity development, because these are new types of organizations which also need this capacity building on their way of scaling up. And on the graph, we see on this darker purple that catalytic capital providers would then, the finance that comes from that could be distributed in terms of loans, guarantees, capacity building, and equity investment into startup non-profit organizations, while later on banks can come in with loan financing under these specific conditions that we have been discussing, like long-term, so above 25 years, and affordable, which in this region would mean under 5% interest rates. And these do not exist at the moment. So as we saw, there are finance mechanism for individuals and for sale housing projects, which are, let's say, invested in for a couple of years, up to 7 to 10 years. And after that, apartments, during that period, projects pay back. So we can go to the next slide. So where could this potential capital inputs in the breakthrough phase, so in this phase of providing catalytic capital, come from? And there is a sort of a pathway of sources of this potential capital under the current conditions that could contribute in this direction. And one of them is private philanthropy, so organizations which understand the cause and can be supportive to development of this sort of institutions. Peer-to-peer financing, in the case of cooperatives, this is collaboration with established cooperatives in other parts of Europe. Community financing, which means coming from bottom up, impact financiers, then EU financial instruments and guarantees, and of course, national level public through subsidies and loan-based instruments through national development banks. And the question is then how to unlock this, how to start it. And the practice which MOBA housing as an umbrella of cooperative housing organization is starting now is and experimenting with is building up the role of this intermediary organization, and through something that is called MOBA Accelerator, to which at this stage MOBA is expecting two types of contribution. One is by impact donors, so non-refundable contributions in terms of donations, and shares, so taking stake in MOBA as an organization, and shares are withdrawable without interest and voting rights in the organization itself. And on the longer term, once that let's say the accelerator is built to a high enough volume, other sort of investment supports in terms of bonds with fixed terms or with interest rates could come in. And what can be provided from this are loans for starting organizations to actually build the pilot projects which would prove the case of this sort of development. On a longer term, this accelerator can also be guarantee element, and on even a longer term, it can provide finance for land and home acquisition and be shareholders in the local projects also as a guarantee against speculation. And maybe it's important to mention that currently MOBA is working on bringing in €1 million within the next year and the €5 million in the next 3 years. And this would allow for a pool of pilot projects to get started, and with that to open perspective on further diversification and innovation of the housing sector in Central and Southeast Europe. And with that, this is the end of this part of the presentation. And we would like to thank you to listening to this. And at this point, maybe we can take 1 or 2 questions before the respondent stage.
Yes, I think I will stop sharing so that we can better see each other. And so maybe, because there will be some time at the end for more discussion and questions, but if there is some technical or like immediate question about what we explained, then people can put their hands up or turn their cameras on. I didn't have time to read through the chat because I was sharing my screen, but maybe you can come back to those, or Csaba. Yes, Gregor, go ahead.
Yes, hello. It was very interesting presentation. I'm very interested to follow to follow what will be the next steps and somehow observe how it is all built up. So my question is, what would be the status today? I mean, is this just an early concept, or do we have already certain investors who are willing to be one of those providers of catalytic capital that already would fund proposed pipeline? Thank you.
Anna, would you like to respond to that, or should I? Go ahead. Okay.
You can go ahead.
Well, I think it is rather the mobile accelerator as such is set up, and there are some first initial stakeholders who are more like peers than capital investors. And under peers, I understand like housing actors or actors from the housing field that would engage through committing shares. So the mechanism is set up, but there is no higher commitment or larger scale commitment at the time. But these are negotiations that we are already starting to have and will continue to have. So we are also very happy to further discuss this with you. And there was also a comment, but before taking the question from Pete, maybe Goran, you can say out loud what you wrote in the chat, because it also concerns the European Investment Bank, and then maybe it's relevant for Gregor also.
Yes, actually the question was, would the third party guarantee help in getting the loans from different banking actors, including European ones like European Investment Bank? And it certainly would. However, most of the development banks have some minimum threshold of the portfolio that they finance. For European Investment Bank, it is around 30 million euros or more. And the challenge is basically to develop such a large portfolio in lack of the implementable projects, projects that are already implemented. So basically, it's difficult to start large, better to say. There was also a related question on the possibility to use revolving funds as it is a model of Austrian cooperatives. And I would say that it is definitely a possibility, and it is a great model for expansion and perpetuation of the model. However, it also requires initial funds that can be revolved later on through the accumulation of existing cooperative housing. So basically, that's some next stage that would probably follow once the model is kickstarted. And then maybe just a comment, since we have here pilot projects that were developed through MOBA, they were all somehow bootstrapped or crowdfunded initially on a very small scale. But we have now all the elements and the understanding what is required to kickstart the model on the larger scale, and some kind of the understanding of communities, including municipalities or some other actors that could help and support creation of bigger aggregate of the project would definitely be a deal breaker then allows the whole model to perpetuate more quickly in the future.
Yeah, so maybe just a small explanation that Goran is the manager of the cooperative for ethical financing, and who are also our partners both in this project and also in MOBA, and that's kind of why we were also relying on their financial knowledge quite a lot. And I learned that Luca Corlaet will need to leave the meeting soon. So Pete, if that's okay with you, I would perhaps take his question first, and then we will wrap up with these two and move on to the respondents, who will also contribute very interesting things.
Thank you, Susanna. I've listened very carefully all of the presentations. I would say that the impressive work has been done with superb insight. The city of Zagreb is in the process of formulating affordable housing policy, and we are quite interested in initiatives like the ones that you've presented. And my question was, would be, could we get the presentation, the presentations?
Yes, yes, I think we will put it online probably, or send it out to the participants. We haven't decided about that yet. But yes, there was a question on this in the chat too. So I think we will share it afterwards, yes.
Okay, great. Congratulations one more time.
Thank you. And thank you for coming.
You're welcome.
And last question from Pete, and then we will move on to György Sümeghy and Mirjana Šakić.
A question and also a, shall we say, tell you what happens in France. Local authorities guarantee loans for social housing, including cooperatives which integrate majority of social housing within the structure. So that's one way of getting guarantees. Obviously, we're not talking about 30 millions then, we're talking about the size of a project, which may be, shall we say, 4 or 5 million, but local authorities are guaranteeing those loans. And the second item was, as I said in the chat, do you have within your countries pension funds, which obviously need long-term to generate a source of revenue on the long term, and that source of revenue could be your loan repayments in cooperative housing. But that doesn't exist really in France, because the pension model is a redistributive model and not principally a pension fund model. But in a lot of other countries there are capital funds which are used to finance pensions. Yes,
I won't be able to respond for all of the countries. In Hungary, yes, they do exist, but there is like this kind of practice and institutional framework of connecting them with housing does not exist for the moment, but this is something that could be interesting to explore. But for the moment, or in the existing institutional structure, it is more worthwhile for them to invest in other kinds of assets, and state bonds, for example, and other kind of long-term assets. But yeah, it is something that we have thought about to explore. And so now we will move on to the respondents. So we asked 2 housing finance professionals to comment on our report. And so first there will be György Sümeghy from Habitat for Humanity International. And second, there will be Mirjana Šakić from Social Prudence Consulting. And we are very happy that we were able to collaborate with both of them already in the process of the research, because their knowledge and insights were very valuable for us. And so Habitat for Humanity International has a very big network also in the Western Balkans and Eastern European regions. And they are also experimenting with new financial instruments. And Mirjana has a very big experience and widespread experience in different social finance mechanisms, and she is also supporting us about how to think about potential new financial instruments. So first of all, I will pass the floor to György, and then afterwards to Mirjana. And thank you very much for coming.
Thank you, György. Thanks for the opportunity on behalf of Habitat for Humanity to be part of the research and also part of this presentation. I asked the audience to bear with me because we already started the discussion, the very interesting discussion about the financing models, and now you have to bear with me to switch back a bit because I was asked to comment from an affordable housing perspective so we are going a bit back to the first part of the presentation for the demand side. First of all, let me say that regardless of the main aim of this research to make the case for investment for cooperative housing in the region, I think it's very valuable, all the data and insight which is captured in this research generally for making the case for improving affordable housing in this region. I think we need evidence, and now we have evidence gathered in all kinds of shapes and forms in about 8 countries in the region. I just want to add that recently, with a group of researchers, Habitat also did a similar deep dive into the housing system of 4 countries in the region: Poland, Romania, Slovakia, and Hungary. And Hungary is the common ground. So now we have more than 10 countries in the region of which we have very good data about using for policymakers to make the case for affordable housing. I believe that a lot of things were really key to characteristics were confirmed by this research, especially the super ownership structure. There was also reference to lots of empty homes in this region, which is a very important characteristic. The unregulated rental market in many countries. Also that even if new social housing stock is built, very soon it is privatized and sold, so that the absolute number of the stock is not increasing. And all this led to this, what I think I heard from Knut Höller, who is present here for the first time, that in these Central and East European countries, for many reasons, there is a big group which is called by Knut the missing middle, that people who are not poor enough to get social support, if there is any, given by the state, and not rich enough to qualify for a commercial mortgage. And this is a huge group in our societies. And I think this research is making the case that there is a demand for alternative options than mortgage or staying with your family or rent on the market. Also, I want to put into context the whole cooperative initiative. It seems that recently there are emerging solutions in this region. Some of them are coming from, as best practices already existing from Western Europe. I could mention the social rental agency model, then housing-led projects like what the Bruno did with the rapid rehousing project. And then last year at the Social Housing Festival in Helsinki, there was a whole day for collaborative housing. And that was the place where I felt the most energized, that there is a momentum now in the whole Europe and especially in this region for options for collaborative housing, in which obviously cooperative housing is one of the key models. I would go back what Csaba referred to as the key narrative. Both politicians, but even sometimes housing practitioners and even people tend to say in our countries that people want to be owners. That's the only solid solution they need. And many of us in the profession felt that this is not true. But this is, I believe, as far as I know, the first time we have survey-based evidence that this is not true. I think the figures were even staggering and surprising for many of us, that how big is the real demand for alternative rental housing solutions or cooperative housing. If you remember, the figures were between 13 and 26% of the population of the 4 capitals which were surveyed. If you think that we are talking about more than 4 million people in these 4 capitals, and if you think about the 15 or 20% of these population, we are talking about hundreds of thousands of people living in the capitals in this region. I think this is a great story to tell. I think this is the biggest thing from my perspective coming out of this research for advocacy, that now we have evidence that ownership shouldn't be the only option for policymakers, because there is a real demand for alternative solutions, and we can make the case, and we can mobilize people to put pressure on policymakers using this data. And last but not least, I want to mention that what Anna presented, the need for these intermediary organizations, the non-profit housing providers and the non-profit financiers. This sector is truly underdeveloped for historic reasons in this region, but we are not starting from zero. So there are non-profit housing providers, usually NGOs, and some of Habitat organizations in the region are running social rental agencies or running building maintenance companies, or even doing lending in Macedonia and in Poland mostly. In Hungary, we know the organization ULE, which is running a small social rental agency. MOBA itself as a group is becoming a non-profit housing provider. So I think we can map actors like this, and we can make the case that with some capacity building and investment into organization, into the existing organization, and creating new ones, I think we can start this development of a whole new sector in our region. And last but not least, it was already referred by this question by Pete from France, that I do believe that one of the successful models for non-profit housing provision, not necessarily for cooperative housing, but in generally, in my experience, is when NGOs can cooperate with municipalities. And that's how most of these projects I mentioned were developed, either in Brno or in the Habitat countries, that neither the municipalities in the region nor the NGOs are usually strong enough to kickstart something relevant, but by joining forces and using synergies, you can go forward with improving the non-profit housing institutions. Thank you very much, and thank you for the great presentation.
Thank you, György. And now I will pass it on to Mirjana, and also to the audience. I just want to encourage you to post any questions in the chat if you have some.
Thank you, György. Also warm regards from my side. My name is Mirjana Šakić. I come from Belgrade, Serbia. As György mentioned, I do have extensive experience in finance, namely in banking. I've been working for last 15 years in one of the banks operating in the region, specializing actually in so-called social banking, which is a kind of a banking exactly for those who are excluded from current, mainly market-based products that banks are offering. And thank you also for inviting me to contribute and to join you together on this journey. I would rather say than report and survey, because you guys started really a long journey. I congratulate to all the consortium members on the report, and I highly encourage and invite all the participants to download the report and to take a look whether the some parts only or the overall findings. And I will not take too much time, because also György, but also Anna already tackled a lot of these financial instruments, and let's say the overview on the banks and other financial institutions who might be good partners. And I love this word. I think all the speakers and György just latest mentioned the need for this multi-sectoral approach, meaning the partnerships which are essential. So I will just briefly go through this financial part, which you analyzed. And there remind ourselves that actually the decade that we are looking back at was somehow characteristics in not only in our region, but in the wider region, with historically low interest rates and with historically low inflation rates. So these are two factors which we must not take at any moment out of our heads. How come that actually this expansion of housing loan markets, but actually also housing loan itself happened? And as that data from your report shows, this expansion contributed to further rise in housing prices and increased affordability, rather than actually helping people or somehow enabling people to have more chances and to have better access towards, at least for the majority of citizens. So let's just take a look what products we are talking about when we are talking about private individuals, like natural persons like we are. We are talking about predominantly individual mortgages for property acquisition. So we are talking about market-based product, mortgage loans for housing purposes. They're fairly standardized products. So regardless, let's say, from the list of the banks that you guys very nicely showed, the product itself does not differ much from bank to bank, especially on one market. And this product, these mortgage loans, are very often accompanied by state subsidies, and we have witnessed what that was not the sole case in Hungary or in Croatia, but all over the region. The main criteria for a person to have the access is sufficient income and collateral that I can offer to somehow guarantee that I will, if I cannot pay back, the bank will not lose. Additionally, a lot of banks are adding more criteria, which just adds more elements for the people not to be able even to exit. To access the loan itself. Most of the mortgages are with fixed interest rates. Some of the subsidies do offer a certain amount of time, fixed time during the loan duration. This is just another layer. Public spending on housing in our region, the region that you are taking into account, is very minimal. It's focused on supporting access to home ownership or to a specific group of people. For example, in Serbia, we do have a case where there is a state subsidy for army or for the police or public servants, or in Hungary, we have similar cases. But what happened as a result, and we do have already data and researches, for example, in Croatia, we have the facts now and the evidence that these subsidized housing loan programs contributed mainly to the increase in prices on the real estate market, and especially in the areas where market was already under high pressure. You mentioned also consumer loans as additional product, which we have currently on this market. So based on this, and I think it is important to know the characteristics of these products and to be able to analyze how and if they can be used in the future as suitable instrument in certain of the phases that you guys also shared in a previous presentation. So what is also unknown, and there are a lot of uncertainties, I think all of us are witnessing quite turbulent times on finance markets, not only in Europe, but worldwide. A lot of uncertainties. We hear every day new moments and insights. Currently, Swiss financial system is, of course, interesting, and to see how the things will develop. But nevertheless, it is very unknown to see and to know how these loans and these products that we currently have will look like in the future, due to the increased growth both on the interest side, interest side rates, but also on the inflation, not to mention all the other costs which are rising due to the war in Ukraine and all the other imbalances. So this is, let's say, the current product which is available when it comes to products for private individuals, for households themselves. On the other side, you also did a very nice overview. What is available for the companies? What is available for housing market companies? And when we look at the more developed markets, some of them were mentioned here, like Austria, like Switzerland, like Spain or UK. You have countries where you do have developed the rental and cooperative housing sector, where you do have policies that were led eventually to the development of this sector for in many decades behind us. So this is something that we cannot take out of the picture, since also these markets did not grow at once. Currently, for example, just as illustration, in more developed markets, affordable housing projects are usually financed through long-term financing instruments and products that are at least 25 years long, compared to those in our regions, which are purely market-based. György mentioned that they're like, let's say, 3 to 5, 7 to 10 years most. These are very good conditions. And you also mentioned the interest rate, which on these more developed markets was under 5%, which was not the case in our region. So these long-term project finance instruments are deployed already and developed in cooperation with all these robust, experienced housing providers, both coming from the public sector, but also, as you mentioned, from the civil sector, mainly from coming from NGOs who are either providing or supporting affordable housing, social housing, and cooperatives and similar initiatives. So as we already saw in the report, currently, if you want to build a house in our region, and you do have at least 20% of your own funds for this, you can expect only 2-3 years loan duration of loan, quite expensive, with probably a lot of additional requirements from the bank, because the bank currently would see this project as project financing. And this is what the banks will somehow compare it with. So currently the banks are providing these short-term funds, quite expensive for the construction companies. They build the building. Very often the banks are combining this financing with mortgage loans to sell these apartments. And this is the business model that the majority, I would say, all of the banks from your list are seeing this topic today, as the situation is currently in our region. So when it comes to current products, which might be a little bit adapted, I would say, we have case in, for example, other real estate sectors when it comes to financing projects, which are meant not for accommodation, but for example, for offices and other renting facilities. So when discussing with banks, it would maybe make more sense to think of and design, let's say, a new product, which is more common for financing current projects, but not for living, rather for renting. And in that respect, and I would like to finish more or less with this notion from the report itself, I do miss the role of public financial institutions. And we can see also the evidence in the more developed markets and the examples that you showed, that the role of public financial institutions, whether it will be municipality, and in, for example, Slovenia, I maybe understand that somebody from Slovenia is not very happy with the setup that is happening in Slovenia, but I would just like to make a comparison that also municipalities can have possibility to establish these small revolving funds, which were mentioned in the discussion before. Also, the cities can have possibilities to cooperate with the multilateral financial institutions, such as you mentioned. We do have representatives of EIB here, but also I'm sure that a lot of you are aware of the European Investment Fund, which is actually partnering together with European Investment Bank and currently implementing some of the biggest programs that are initiated by the European Commission. One of them is called Invest EU, where actually the countries and relevant stakeholders in the countries, mainly coming from public sector, but doesn't have to be necessary. I will share with you also another example, do have the ability and access not only to get, let's say, the guarantees or other financial instruments which will boost the certain activity in a certain area, whether it's a green economy, affordable housing, social entrepreneurship, all the other topics, but also the countries and the local stakeholders can get a lot of technical assistance, a lot of knowledge coming from people who were developing these things in more developed parts of the, especially parts of the EU. So I would highly encourage, let's say, these discussions and inviting much wider stakeholders, because only in that kind of setup we can think and we can develop more innovative financial instruments, more suitable for these needs, because these financial instruments cannot be market-based, and simply it's impossible to use the existing market-based financial instruments and products and just transfer them to the topic which cannot somehow fulfill the requirements that the market capital has, and that is to rise and to get the money back. So in that respect, I would yeah, stop here and answer if there's any other comments, or I'm sure that the discussion will be fruitful. Thank you once again, and congratulations.
Thanks a lot, Mirjana. And now we can open the floor for questions. There was no question in the chat in the meantime, just a few comments from Pete from Habicop on the length of housing finance instruments. So I don't know if anybody has any question that you would like to put forward now, then please go ahead. And if not, or in the meantime, well, you can still think about any question you would have for a few minutes. I wanted to say that we will be presenting these results, and we will be there in person for discussions the next time in Zagreb on the 22nd of May at the Zagreb Real Estate Conference. And then afterwards, in June, there will be the International Social Housing Festival in Barcelona that I'm sure several of you will be attending. And we will also have a session there about these topics. Many of us will be there in person as well. So we look forward to discussing with you on that occasion, but also, of course, online until then or after that.
And also on Urban Future in Stuttgart in June.
Yes, sorry, yes. Yes, Andres, you can go ahead and ask your question. You put on your camera on.
Okay, so I have at least hi, my name is András Forvai. I will also try to do the video. So thank you very much. I'm not ball here because George invited me to join. I teach at the Central European University at the moment, but I'm former staff of the World Bank, retired. So so I've been involved in these questions of long-term financing and development. So the question is, so two parts to this, one, if I understand correctly. So one is the social housing aspect, right? Where you have a public good argument for government, whether it's local or central, to step in and provide subsidies for people who cannot afford any kind of housing. So that's one part. The second one is that's a much larger one, I guess. This is the middle, the missing middle that György mentioned. And my question to you is, and probably it's quite provocative, but is there really a public good argument for public funds to be spent for this large part of society? And if there is, how would you deal with the duality of the rental market? So there would be people from this missing middle, probably the majority, who would have to go to the market and pay the market rent, and there would be a smaller group that would benefit from some form of subsidized rental. Thank you.
Okay, thank you. And maybe you can take Gregor's question as well and then respond to both of them.
So this is Greg Gaida from the EIB. Actually, I wanted to somehow give the EIB way of thinking on Andras's question of public good and the justification of spending public funds on the sector, if that is okay with you.
Yeah.
So from what we are doing here in the EIB, we finance public housing delivered by public sector entities at non-market prices in Europe, most in Western Europe though. And it is a very large scale on which we are doing that. It is between 1 and 3 billion euros per year. So we are obviously trying to understand why we are doing this way. And the reason that we are finding is that, well, it is a misconception, in our opinion, to think about housing as a market good. I mean, TVs, food items, clothes can be delivered from places where they are abundant to places where they are needed. And then they can, market can regulate the situation. Here with housing, the thing is that what we are really talking about is very limited supply of buildable land. This land is limited in terms of supply through natural causes. So what actually happens is that we always are facing a situation of supply being naturally limited. And what market does is actually to elevate prices of housing based according to monopoly pricing model, which prices out from that market substantial part of the population. So we see this as a market failure, really, which justifies involvement of public funds. And not only public funds, but actually involving public regulations in the sector. And we think it's the most efficient way of actually addressing the market failure. I mean, theoretically, you could think about other ways, but I think the practice has been that this is the way that has turned out to be the most efficient one, really. So that is why we justified for ourselves here at the EIB substantial involvement of public housing, of public funds in housing, and also we justify operating in a sector which is heavily regulated. It's due to its quasi-monopoly structure. And if it's interested, we could take that discussion offline and then discuss bilaterally if there is an interest. Thank you.
Thank you for your contribution. I would also respond, and then maybe some of the others would like to. And I'm glad this question was raised because I think it's a quite common question of like what's the fairness or the legitimacy of the distribution of public funds in this sector. And yeah, first of all, I think we agree with the EIB approach in the sense that this is not actually a market or the housing. It is called the housing market, but in the end, it is very, very much influenced by state policies and state subsidies, even as it is right now. So it is actually a, well, it is an illusion of a sort that there would be a free market currently in terms of housing, and public funds that are now being dispersed. Also, as Mirjana was mentioning, all of the public subsidies that go to home ownership, they do have a very strong social and class preference, and they target households that are middle class or upper middle class, and they support the loans and the home acquisition of the first and second income quintile in the end. So there is already a political decision in this sense. And I think the models that we are proposing here, both the limited equity cooperatives and the rental models, yes, they are shooting at this very broad middle that you were mentioning, and we think that it is politically much more legitimate to target this kind of broader segment and the part of society that cannot access ownership on its own, or that cannot solve its housing problem on its own. And we also think that public funds are much better used in institutional models that are for the long term, that are not just a one-time financing for individual households, but that finance some kind of institutional structure that will remain there in the long term. And also these models are able to combine private and public resources, and that can become a more efficient way of using public funds in the end, if you can combine it with some kind of private resource that allows it to scale up faster, let's say. And Goran, yes.
I would maybe just like to add that we were not discussing the implementation of the model in depth that we were talking. We were more broadly outlining it, but the model is very compatible also with the different social actions by public actors. For example, in this cooperative housing model, municipality could be partner in, I don't know, securing some number of flats for people that are socially deprivileged, that are falling in this social group that would usually qualify for social housing. Part of the model is utilization and planning how to put a space that is shared by tenants to some kind of the useful function that could be also social function, like providing social services like kindergarten, or I don't know, elderly care or something like that within the scope of the housing cooperative. So basically, just by going into the detail of the model, it is very compatible with providing different social services to the community and prevent negative social effects like ghettoization or kind of the gentrification of the neighborhoods if it is planned on a larger scale in combination with public actors like municipalities. So I wouldn't see it as mutually exclusive, targeting only this middle group, but as a very flexible model that could be put to a large social use by the municipality as well.
I don't know if anyone else would like to leave the possibility for one more intervention. Sorry for the siren. And then maybe we can come to a close soon, because we are already over time, and thank you for bearing with us, and like so many of you still. Okay, but then if nobody comes forward, then I would really like to thank all of you for the active participation, and I think it was a very nice session. And I encourage you to download the report, and we will also send the slides as was requested. And we hope to meet many of you soon, either in person or online. And thank you very much.